My name's Abdullah Usman Alaji, an accountant with Sagama Construction and Engineering Limited. As an accountant, a chartered accountant for that matter, I'm here to handle the financial aspect of the company, to ensure compliance with the tax authority and other governmental agencies, and also to ensure that internally the financial aspects is being dealt with in accordance to standard. So that is the time the accountant of Sagama Limited. It depends on the type of tax we are looking at. For example, CIT, which we call company income tax, is paid based on what? Preceding year basis. Preceding year basis. So this is 2026, right? Yes. So from January 2025 to December 2025, the profits you got will be subjected to tax in 2026. If your business accounting year is December, that is, you are going to prepare audited financial statements between January and June 2026 for 2025, and you pay tax. So you can say that company income tax is paid yearly. Company income tax, good. While payee, which is personal income tax, or one of the personal income taxes, is paid monthly. It's paid monthly. Each month before your salary is paid to you, that will be deducted. You are talking about Nigerian case now. Yes. It will be deducted and remit within 21 days to the tax authority. That is for payee. Value-added tax is paid when you purchase vertible items. Each time you purchase a vertible, you engage in vertible services, and you pay VAT, VAT will be paid to the tax authority within 21 days. If you paid it after 21 days, it's an offense. So all these regulations are there in the tax law. And then withholding tax too. You gave out a contract to somebody or to a company. Before you pay, you are going to withhold or deduct the withholding tax. Withholding tax, you are going to deduct it and pay it to the tax authority based on whether the contractor is a corporate entity or a business name. So that is it. So some taxes are paid monthly. Most of them are paid within the month. And then I think it is only CIT that is paid per annum. Yes.
So what about small business owners? How do they pay their tax?
Some small business owners don't pay tax at all because tax is based on the income you generated, the income you have. There is a threshold. A small business that have a less than 500 or 50 million naira turnover will not pay tax. You understand? Likewise, a corporation that has less than 100 million turnover, not profit this time around, turnover, within a year will also be exempted from paying tax. That is a new law, you understand, which is a good one for small businesses. You understand? So some small businesses, so it depends on what you mean by small business. People selling akara, mama put, all these people are exempted from paying tax. The only tax they are paying is when they make a purchase of a vertible item, which will be added to their invoice and they will pay. Some of them don't even know that they are paying that type of tax. You understand? But you as an individual, if your income, the income you have is above 800,000, that is when you will be subjected to tax per annum. Or if it is less than, you're not paying any tax. So the same thing goes to small business owners. You understand?
So our last question is, how can individuals and businesses legally minimize their tax liability without risking penalties?
Yes. I've explained that.
The last one is there such a thing as overpaying tax?
Yes. If you don't have a good record keeper, you don't have a good accountant, at the end of the day, you end up paying more than what you should. You understand? But with a good record keeper and accountant, you are going to pay, the tax you should. You understand? If you overpay your tax, you are doing yourself a financial harm. So there is a situation whereby you can do that. You didn't compute, you didn't keep good record. There are things you should have deducted, you didn't deduct them. You understand? And you went ahead and paid tax. Definitely you are overpaying. If you get what I'm saying. For example, now, the pension we are talking about, you compute pension, but you didn't deduct it from the gross income. You charge tax on the gross income without deducting the pension contribution. You are overpaying. So that is, there are so many ways you can overpay your tax.
That's all. Thank you so much, sir, for your time.
Thank you for having me, and I appreciate it. Thank you so much. Okay.